we're winding down on earnings for the second quarter, a very successful earnings quarter where there were more beats and raises than not. So that's a little surprising, right? A lot of people thought it might not be a good earnings season, but it was, especially led by the Mag 7s. And we still have one more to go. Next week, NVIDIA will be reporting. I'll be bringing you a special video on NVIDIA's report. Make sure you tune in, subscribe at zax.com/YouTube on our YouTube channel to get all of these videos. But this week, let's not forget what's going on. We're getting a lot of the big retailers. Normally, there is some interest in those. But this quarter, we're interested to see, are they raising prices? What is happening on the inflation and tariff side? Are the consumers pushing back on anything? Are they even showing up? And we're going to get a bunch of different types of retailers this week, including some of the big guys like Walmart and Target. And we're going to get the home side of things with Home Depot and Lowe's. But let's dive right in, take a look at a few of these charts because this is going to move the market this week. Okay, the first one that's going to be reporting out of the gate is Home Depot. A lot of times where this one shows up on the calendar, I haven't been able to cover it as extensively as I like to, but this quarter I can. And you can see, just looking at this price consensus and surprise chart, one of my favorites, that it only has one miss in the last 5 years. And it was just last quarter, barely missed, just 0.8. So they have a great track record of meeting or beating. These are pretty small arrows, but a beat or a meet is still great. And they're able to do it. But look at the earnings here. We have a little bit of the earnings decline. The last couple of years, not surprising given what's going on in housing. And now we've got tariffs on a lot of these products that Home Depot is carrying, appliances, wood, lumber, just about everything. They may have some tariffs on. What's happening with that? You can see 2026 is looking a lot better here, but 2025 dragging down and not really any earnings growth. Let's see what it says down here. Yeah, we're looking at down 1.4% on the earnings side, but a rebound going into next year. So this is going to be an interesting report and everybody's going to be watching it. We've already had Builders First Source. Its earnings don't look good either because of the reasons I just mentioned. So Home Depot going to tell us a lot about what's going on the housing side of things. Okay, then we could let's just stay on the housing side of things. Let's look at Lowe's too, because, obviously the same type of situation. You can see on this price consensus and surprise, they too, great earnings surprise track record, no misses for Lowe's, and earnings expected to come down each of the last years, but then recovery. Everybody is expecting some recovery. This year, though, 2.4% gain for Lowe's and then another in 2027. So we're not seeing the negative here like with Home Depot, but, we'll see. We'll see what happens on this very important report. Also on valuation side, because those earnings are declining, PEs aren't even that cheap really here. And the shares have really fallen off a cliff for either Home Depot or Lowe's because everybody is basically expecting a turnaround to come soon. So that's starting to be priced into these shares. But we'll be watching. So this is Lowe's, LOW, the ticker there. And then we're going to get some of the big kahunas on just regular retail. Walmart, let's start with them because they've been crushing it. And the shares were busting out. Still get this X number rank 2 there. And you can see they've trying to bust out again, kind of stalling here. But earnings looking better than what we just saw with Home Depot and Lowe's. But look at the valuations on Walmart here at 38 times. It's got a great earnings surprise track record. Last miss back here in 2022. Then we had one in 2021. So I'm not too worried about it. Still small little arrows. So not huge beats. This one 2 quarters ago was just a barely beat at 1.5. But this is just a play on what are they doing with pricing and is the consumer buying? And don't forget also with Walmart, it's a mix of things. They're going to have back to school. They're going to have groceries, just about everything, apparel, shoes, just furniture, everything. So this is going to be the big one this week, and I'm going to be tuning in. The other big one, Target, but this one's been struggling, as we all know, TGT. And look at the difference in these charts. One at near the highs, the other at 5-year lows. And these earnings are really on the decline here. And you're getting a much cheaper stock at 13 times now. But that's, look at the earnings here, 15.6% decline expected for this year. And lots of misses in here. So lots of disappointment. But is the shares, are they cheap enough here for Target with, near this 5-year low? Has everybody thrown in the towel on Target? We're going to see. But I'm also watching this one to find out about the tariffs, inflation, what the consumer is doing. So this is another key retailer here. And so TGT going to be on everybody's radar. And after we do those big four, I did want to talk about one of the specialty retailers, Estee Lauder. Are they a retailer? I guess they kind of are, but they're in beauty and they sell through the big retailers like the Sephora's at the department stores. They are a global brand, but this chart on the earnings side is great. Just 2 misses in the last 5 years. You can see the one here in 2023 and then all the way back during the pandemic with the big miss there. But otherwise, huge beats, right? Look at this, 124% last quarter. But those earnings have really come down, especially on the struggling Chinese consumer. They're a big brand in China. We are off the lows. You can see here off the lows on the shares. Earnings expected to get better in the next couple of years, but not this year. Look at this 42% decline. But next year, finally seeing a change in those earnings. Forward PE is not cheap, even though those shares have come way down at 42 times. So this is the opposite of Target, where the shares were trading near 5-year lows, still not all that cheap, but these shares were trading at sky high valuations before the troubles the last couple of years. People willing to pay up for the growth, but then the growth went away. So now they're not willing to pay up. Or are they? We did see, as I mentioned, this nice little bounce off here. But this is going to be a big earnings report for Estee Lauder. The Chinese consumer has recovered a bit here. And so will that help? But what's happening with the U.S. consumer and with tariffs as well? On a lot of beauty products, we've seen tariffs, including e.l.f. Beauty, talking about how they've had to raise prices because of the tariffs. So will Estee Lauder be the same? We will see. EL is the ticker. There's a lot going on this week. So again, make sure you subscribe to get all of our earnings. All-Stars video, just one more week, but it's a big one next week. NVIDIA, CrowdStrike, many other retail stocks. Don't miss it. So be sure to subscribe, and I'll see you again next week with some more earnings charts.